Good on you! You found the Pirls Stock Market Commentary for October 18th, 2015. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 0.97 fell from 0.99 last week, remaining in very slightly bearish territory. The total count of securities in bullish or bearish patterns fell 6% to 2,691. The count of bearish stocks decreased 5%, while the count of stocks in bullish patterns increased 7%. The Pirls PNF Market Breadth Summary Chart shows us a market now 21 consecutive weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To subscribe to the free S2P Commentary email, simply enter your email address in the appropriate space. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 154 points for the fifth advance in 7 weeks. At a negative 260.32 points, it continues below all 8 tops above plus 100, continues above the August 2015, the October 2014, the May 2014, and the August 2014 bottoms, and continues below the January 2015 bottom, the 5 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior market week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 3 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. At Monday 10/12 close, the CCI 20 had 6 consecutive days above zero for a Woody's trend change to up. At Thursday 10/12 close, the CCI 20 daily formed a zero-line reject pivot point within the plus or minus 50 range, so we entered the long trade simulation at Friday open. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 4 weeks ago, while the daily CCI 20 began a Woody's uptrend this past week. The CCI 20 weekly has risen to negative 37.30 from negative 65.4 last week and is now inside the plus or minus 50 range required for a valid zero-line reject short entry signal should the CCI 20 weekly fall next week. Industry rotation the last 2 weeks. All of the top and bottom 5 industries are positive. Bullish semis has re-entered the top 5. Bearish gold and silver continues to lead the top 5. KBW Bank and brokers continue in the bottom 5. S&P Retail, Networkers, and computer hardware have entered the bottom 5. Oil has entered the top 5. Focus this week from www.zerohedge.com, Global Debt and GDP. Spot the odd one out. Right. Trick question. There is no odd one out. When it comes to debt and GDP, it's the same around the entire world. Thank you for viewing this week's Sand to Pirls Stock Market Commentary video featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a productive and prosperous week coming up, and wishing you true success.